Hello, MJ friends. We're going to look at a whole bunch of stocks, the big five, the tier 2, 3, VFF, TGOD, N, KHRN, NRTH, CXXI, CWeb, IIPR, Kira, MedMen, IAN. So what we are watching is the key tightening 6-week long equilibrium of CGC, and it's just getting tighter and tighter. We're looking for a higher low to form compared to 43.71 in order to maintain within this pattern. And our key resistance is the double top Monday and Tuesday, or actually Tuesday and Wednesday, and that was up at 48.01. So those are the two levels that are most important to me in terms of price levels. People that like drawing their trend lines are going to set them up, and we can see that we're still just fitting right snugly in between those trend lines, showing that tightening range. To get rid of these other lines to see only the trend lines, and we can see that a break is likely imminent next week, early next week. There is going to be a volume spike associated with this break, and that is going to give us short-term direction, in my opinion, as we head into April. So that on the weekly time frame is either going to look like a bull break to head to the recent high of 51.81, or a bear break to indicate that a longer-term equilibrium on the monthly time frame needs to play out. Let's see what it looks like on the monthly. So the high, low, if we lose that support level, we're going to say our monthly low or high has been set, and then heading into the summer, we're going to look for a monthly high or low to be set. And a monthly equilibrium will be the most likely scenario if we get a bear break and follow through of this equilibrium. Now, keep in mind that I highlighted the most two important price levels, but we have to see follow through. You can't just break one of the levels on an equilibrium and have that be enough. You can act on the first break and act on that signal, but you have to be skeptical of the bulls or the bears, whichever break the direction occurs, and make them prove it by breaking multiple levels. So let's just say if we went up bullish and I made a bull entry on the break of 48.01, that's fine. I can be in the trade, but I need to see 48.90 break either the same day or the day after it to prove to me that the bulls have follow through. So same thing to the downside. If we break 43.71, we have to break 42.91 and then eventually 41.68 if we were going to prove that follow through in the direction of the break is going to be coming. So again, next week is probably the most important week in March for this sector, and it's going to start with CGC. Cron saw a bear break without a whole lot of follow through at this point. We broke to a lower low below 20.53. We dropped down to 20.36. The key support levels with where we stand here, we're looking down at 19.50 and 18.72. After those two levels, again, it would be more significant weekly consolidation coming, and we would be looking down into the upper teens and exponential support on the weekly time frame. But we're likely going to see a break in direction of what CGC does, keeping in mind two things. Number one, the compared correlation between CGC and Cron, we can say that Cron is weaker. So that sets it up that, in my opinion, a CGC bull break would be less significant on Cron. We'd see less upside, and a bear break might see more downside for Cron. So if we're already a little bit weaker and a bear break occurs in the sector, that would be notable to be getting further momentum in the direction that we're already leaning a little bit. So a little bit of a push in that direction. So that's worth keeping in mind as well. And our key daily resistance on Cron is 22.34. ACB, no follow through today. I sold my swing position in pre-market at 9.15, and that was just, I sold half of it to be cautious and to lock some of that in because we weren't seeing a clear gap up open. And then we started to fade a little bit. So I took all of that profit off the table, as it was clear that we were going to be unlikely to break 925 and see continuation. So this is now the third time. This is a pattern that we can make note of where we have a clear pullback, a clear inside bar and pullback after a big bull move. So just make note of that for the future use. We have a daily inside bar to be watching, which is giving us a tightening range. And essentially what I'm looking at is, don't really like it on the hourly for clarity. Don't really like it on the 4-hour for clarity, but it's clear that we're seeing a tightening range. So if we break 880, we're going to be looking down at 855. And if we break 914, then the high of the bull move, 925, is right there. So sideways range likely to break tomorrow. And we are seeing a tiny bit of downside after hours. So it looks like we closed right in the middle of the range. So it really could go either way. If I were a bull and I wasn't interested in trading ACB and I was just holding on, I would say that today was a pretty decent victory, just in the sense that we consolidated, the bulls held on, we didn't get much pullback from that initial low of the day. So overall, So far, so good for the bulls. And even if we do break bearish, that just means we look for the daily higher low to form, as the last one was down at 733. So ECB bulls overall pretty comfortable. APHA is going to try and change this daily trend, and if it does, we're going to be in all kinds of choppy action, which is why the weekly chart has more clarity for me on APHA. But we have our low of the pullback, the high of the bounce, and here's the bulls attempting a higher low compared to 915. So we're holding 938 at the moment, and if we can come up and break 985, that changes the daily trend with a higher low and a higher high. And looking at it on the weekly, again, it's the tightening range that we're looking for. It's a longer equilibrium. It's just choppy on the daily chart. It's not nearly as clear and clean as CGC, but we have the high of the bull move, the low of the weekly pullback. Our lower high was 1068, and the bulls are attempting a weekly higher low compared to 808 to stay in this tightening sideways range, which we have been in for the last 5 weeks at this point. So you look at this on the daily chart, and you wouldn't really pick out an equilibrium. Maybe a more experienced chartist or an analyst or someone that has, this brings up their memory banks to clearly see. But for me personally, I'd say this is choppy, and then I'd look for more clarity, and I'd look at the weekly and say, oh, well, we're in a tightening 5-week range, just like CGC is, which it makes perfect sense because they are both major names in the same sector. So this is the kind of equilibrium you'd put in a textbook. It's clean, it's good looking. It got its, first date to the prom. Prom said yes. And then you got APHA here, a little bit rough around the edges, probably got its second or third priority for prom date. And overall, same kind of pattern, but very different looking. I never went to prom. So TLRY, we had the low, the high of the bounce, and now we're looking for a higher low to form. This is pretty healthy overall. Not much follow through for the bears, even though we broke the low of yesterday. So this is a bullish scenario in my opinion. Again, hourly chart pretty choppy, not a whole lot of clarity. 72.87 is resistance. 74.95 is the next resistance after that. But if we can get this little higher low and a bull move on the daily, we'll be looking back at that previous support, now resistance of 75.25. And just looking at it from a weekly perspective, we know that any bounce on the weekly under 83.10 is just a lower high. So we're not looking to change any significant trends at this point, but the bounce is holding on pretty well. All things considered, the question will be, can we get over these daily exponential resistances, which have been giving the bulls a little bit of trouble in the past 2 weeks? OGI on the daily chart. So continuing the narrative of the tightening range, equilibrium pattern, high, low, lower high has been set. And we're looking for the daily higher low to form. The volume's very low, as is the norm for tightening patterns. And the bulls still have a lot of space to work with. We can pull back 6% or so and still be right around that support level. So keep an eye on OGI. We're looking for it to tighten up into next week as well. But I would assume that CGC would get a break of its daily range before OGI gets a break of its daily range, as there's a bit more space to work with here for OGI. So it could be potential clues where if CGC were to get a bull break and we see OGI respond, but it's only at $9 at that point, maybe we want to get into OGI, assuming it's going to be a laggard, and get the 920 break and head back to recent highs, if that were to play out. That's an example of how I would use the leader information and potentially apply it to some laggards. TRST, so also looking like it topped out. We have a lot of space for the bulls to work with to try and form this higher low on the daily. We need the daily trend change like we have on CWeb, which we looked at yesterday. The volume stood out. Have to see the higher low and higher high to change the daily trend, give the indication that the weekly higher low has been established, and then look for that move back up to the recent high. So want to just see healthy consolidation for a higher low to form. Same scenario as OGI, just different points in terms of how long we've been consolidating in these patterns. HEXO, gap up open and profit taking today. A lot going on with the HEXO. We've got earnings reaction. We've got buyout of the company, news feed, news, whatever. And we are seeing a bull break. So at this point, profit taking, no big deal considering how much upside we saw, almost a 20% move over 5 days, and a volume climax up with that gap up open. So what does it look like on the hourly? It's still pretty healthy, and we can use a short-term level of 805 or 8 psychological as key short-term support. And if that level holds tomorrow, that's going to be a win for the bulls because it'll be like yesterday. Yesterday we had a bull spike in the morning and then just healthy continuation or healthy consolidation leading to continuation, and this is more of that healthy consolidation. If it does break bearish and we do lose $8 support, we're just looking to fill the gap back to $7.99 and look for a daily higher low to form to keep the bulls in control overall. Obviously, it's a news catalyst and a fundamental catalyst here, but we don't have many MJ names that have seen the weekly higher low and higher high this week getting that follow through. So maintaining the uptrend, we now have 2 weekly levels to be watching. I highlighted the potential of the head and shoulders pattern to be looking at, not a likely scenario, just something to be aware of. That's now out the window and not a possible pattern. So on the weekly trend, we're looking back at the all-time highs as long as we keep the higher lows. 720, make that 685 is our last weekly higher low. So again, a lot of space for these bulls to work with. You can see the exponential resistances. Again, some of these stocks don't really respond well to the 12 and 26 period, and some do respond well. We had a backtest rejection from resistances, turned back into support, and now every weekly consolidation is bouncing off this 12 period exponential. So when I see it act like support multiple times, that's something to pay attention to and could potentially be an early canary in the coal mine signal of a red flag if that level gets lost. Even if it happens before the uptrend gets lost, it could be a little bit of a precursor to keep an eye out for. Again, that's just hypothetical, looking off into the future. VFF, reaction to its earnings, unable to break the all-time high. This might be our signal for weekly consolidation. Still very early, but it's the kind of psychology where you're imagining what just happened, and we had a healthy pullback, a higher low formed on the daily, a reaction to earnings that was favorable for bulls, didn't see much downside, and an inability to break that resistance. So with the earnings momentum and the reason for a bullish move today at the back of the bulls, they didn't have enough power to break that resistance. And it's almost a double top, 925, oh actually this is Canada, 1872, 1838. So if we break 1630, that's very notable for me. That's a clear change in trend on the 4-hour time frame to a lower high and lower low. And that would be a shift that would still have us looking, to the exponential supports that have been holding and to 1384 support, which has been holding. But that's a ways away at this point. If we were to break this level, the next higher low is 16% to the downside. So that would be an initial red flag to me to be watching for weekly consolidation. So that's the most important short-term support level of 1630. If it breaks, we zoom out to the weekly, we look for the weekly higher low to form, and that's going to give an opportunity for a lot of bulls that missed this move up to enter on a weekly higher low. That's all depending on 1630. If 1630 holds, all-time highs are going to break early next week. So we'll see. T-God. So T-God's already looking like its daily higher low might be forming because of this quick shift. So we had the high of the bull move, the low of the pullback. Here's our lower high. And the bulls bought the dip today. We had a bear break of the daily inside bar, no follow through, and we're right up at resistance. So if the bulls can break 445 and then we're looking at 462, this is favorable. And that's pretty much best case scenario. So again, it's very similar to a lot of these patterns, very similar to OGI, but the candlestick from today looks different. So if I'm just comparing two individual names, and if we're going to get bull breaks here, then we have T-God positioned a little bit better because it's right on the verge of resistance already. It already has a little support level established, and it's almost like it's just one step ahead of the game for the bulls. So we'll see if we can break that 445 level tomorrow. And still very tight. We're watching this 4-hour tightening equilibrium with our low, high of the bull move, higher low, lower high, and the bulls are attempting a higher low, not confident it's been set yet. If we see this shift enough and get a break of 77 and make our way back up, then we'll say that 74 is our new 4-hour higher low. At this point, we're just slowly grinding down the exponential moving averages. There's very little volume, so we're not confident the higher low has been set yet, but the 4-hour time frame has the clarity, and we're just patiently waiting for another test of 80 cents for the bulls to try and get this daily oversold bounce going with some follow-through. KHRN tightening up as well. We have our high, low of the pullback, lower high, higher low, and then a little bit of a double top. Most important resistance, 354 and 361. Most important support is 330 and 307. And you can see just how tight we're getting the last 3 days. We pretty much have a triple top at 352. And it's going to see a break sometime. I mean, it's tight just like everybody else. It's so interesting that everybody's reaching these flex points at the same time, regardless of how long they've been consolidating. CGC, 5 weeks we've been consolidating and we're reaching this flex point, 6 weeks. KHRN has been consolidating for what, 4 weeks at this point? 4 or 5 weeks as well. OGI has been consolidating way less. We've only been consolidating for 2 weeks here. but we're still reaching similar flex points at the similar times. And we are going to see volume spikes and volatility upticks in the whole sector next week, in my opinion. Where are we? KHRN just did it. NRTH. Dip buying opportunity. We were just looking for a daily higher low to be set. We reached hourly oversold conditions. Hourly oversold RSI. Here's a little tidbit. Write this down. When you are in a very strong bull move, the 5-minute RSI reaching oversold for the first time usually sees a solid bounce. We see that in crypto, in stocks, in MJ, wherever it is. We see that pattern with a pretty good probability or a pretty good probability rate to play. The same thing with the hourly. The first time the hourly RSI gets oversold, if there's not news behind it as a catalyst or a reason, then the first time it gets oversold, we look for a solid bounce. And NRTH is a perfect example of that. We got just above oversold. We even saw a little bounce there. We got right at oversold and another solid bounce. 119. At the end of the day, we got up to 135. That is a 10% plus bounce in 2 hours from oversold conditions. There's a lot of opportunity there. And now we're looking up at this key 135 level. And we did break it by a penny, but we want follow through tomorrow. After 135, we're looking up at 142, anticipating that the daily chart is likely to start forming a tightening range. So we have our high and our low. The bulls now want to see a lower high form as close to 150 as possible. The higher the bounce, the more space the bulls create, and the more likely a higher low will form after that. If we bounce all the way to 160, we have a ton of space to work with. If we only bounce to 140, we don't have much space to work with. So the size of the bounce is going to dictate the most likely scenario in terms of who's going to come out on top of this tightening range and whether or not we can see this range continue to tighten while maintaining the daily uptrend and our new higher low of 119 on the daily chart. CXXI, this is a weak bounce attempt, but we still have the potential of a shift in momentum. And let's see the 4-hour trend. So we have the low of the dump, the high of the 4-hour bounce, and here's the bulls attempting a higher low, and they're going to have to break 170 tomorrow to change that 4-hour trend and see this bounce get some follow through. And we had a similar scenario with Cura in the sense that we had a weak bounce, the bulls defended support, and then we saw bounce continuation. And for CXXI, we have a weak bounce. This is the bulls attempting to defend support, and they're going to try for continuation, and they have to get that follow through, because if we don't break 160 or break 170, the high of the last 2 days, then we are going to look for another leg down. So for Cura, it was a weak bounce attempt. We held support with a double bottom. And even yesterday, we said this could still be a bear flag. We need a little bit more follow through. At this point, the bulls are negating the possibility of the daily bear flag. And it's because they've created enough space where they can anticipate a higher low to form when we need to consolidate. Compared to that 815 recent low, there's a lack of resistance here. So a nice job by the bulls pushing through and maintaining the hourly uptrend. A little bit of increasing bull volume at the end of the day. Our new hourly higher low is 889. And the next resistance level is going to be up at 926 and then 994. So bulls saving the day from that bear break and a really nice turnaround the last 2 days. C-Web, again, continues to stand out. It's been day number 3 now that the correlation to everybody else is notable for the clear daily trend change, and the only resistance in the near term is 2275, the all-time high. Beautiful V-shaped recovery, beautiful bull volume. This is textbook for what you want to see on weekly consolidation, and then a clear change in trend from lower highs, had a little tightening range with a bear break, lower highs, higher low, higher high. There is your trend change. The $20 break is the signal. And at this point, it's a little bit extended. The question is, are the bulls going to try and run it right to that all-time high, or are we going to get one more little higher low attempt for some healthy consolidation before making an attempt at that resistance? And there's going to be bulls looking to make an entry who maybe missed the initial move, who are going to look to make an entry on consolidation before the all-time high if that does occur. And I believe that will provide some good momentum for the bulls as long as we don't see CGC. Again, CGC breaking bearish and the sector breaking a lot of these tight ranges bearish could stop these C-Web bulls right in their tracks and prevent a new all-time high. So we have to be cautious of that as well. And Cron did that to a certain degree, remember. Cron on the weekly headed right up to that all-time high. That was the only resistance left, and we rejected, and it's been bearish ever since. That was almost like the push from the bulls, the bears rejecting the price, and the bulls giving up to a certain degree, giving up on that all-time high. So that's something that the C-Web bulls obviously don't want to see, but we have to be watching what the rest of the sector is doing as we approach that resistance. IIPR had earnings, bullish reaction, but profit taking after such a significant move. I mean, we went, 20% in 4 or 5 days. So new all-time high hit today, but also the start of consolidation. So now we're going to look for a daily higher low to form compared to 66.55 to keep the longer-term uptrend intact. Nice new all-time high. Congrats to the bulls. This is one of the quieter names that nobody talks about. It is one of the better performers and has been holding up the best. Well, I shouldn't say the best, but holding up clearly in the top 5 out of the last, pretty much since the bounce from the December lows. IIPR has to be at the top of the list, among the top of the list for best performance over that amount of time. And the hold up that we've seen, just the continuation of the strength. MedMen. Still trying to get this bounce going. We did get a bull break at the end of the day over 371, but we only broke by 2 pennies and we don't have the volume spike associated with the break. So it's not a believable move at this point. We have to see that volume spike go with it. So what we need to see from here is follow through and a break of 375, 382, and again, the key level is 387 because that's our daily lower high. Anything under that keeps the daily downtrend intact. We did shift momentum a little bit, holding a couple support levels, but we need a volume spike and some follow through up to that 387 resistance for us to be confident that momentum is shifting. If we break 387, that's when we zoom out to the weekly and we look for a weekly lower high to form compared to 447. IAN, solid bounce the last 5 days, but we have to change the trend. We need a higher low and higher high. We did get a little bit of a brief pullback and then continuation. It's not the kind of move, I mean, you want textbook trend change, it's C-Web. You want that move on your daily. And IAN, that wasn't enough of a pullback. Yes, it's a support level of 676, but if you ask me, is that a daily trend change? I would say you could argue it either way. I wouldn't spend much time arguing with someone against it, but for me, it's not the kind of clear shift to a higher low and higher high that I'm looking for. That being said, on the weekly time frame for IAN here, we're going to be watching the inside bar and watching for a tightening range. The bulls want to make their way back up to the mid 70s, and the last thing that the bulls want to see is a lower high and a lower low on the weekly time frame. So we'll have to be cautious of that. And as a bull, I am much more comfortable when we have a clear daily higher low and then clear continuation like C-Web has given us. So again, no real major red flags, just not an ideal new support level established into continuation. And we'll see if we can maintain at least the 4-hour uptrend, which again needs a bit more follow through. Got the bull break, but there's an upper wick. We want to see a bull break over 720 tomorrow to be confident in the follow through of this 4-hour trend change. So that's where we stand in the sector overall. CGC certainly has our attention. Tomorrow is the quad witching day. It means we're probably going to see some volatility in the overall markets. We'll see if that's going to be a potential catalyst that leads to breaks of these tightening ranges, which would be a little bit earlier than I anticipate. I think most of them still have enough space that we could see another day or two inside these tightening patterns. So I am looking to next week, but I'll be paying attention the first hour tomorrow to the sector to see if we're getting some high volume and some extra movement there. Hope you're well. Do good things. We'll see you over the weekend. Story time, chapter 8. So we are looking now, Colorado, Black Canyon of the Gunnison National Park in Colorado. And it's pretty much like, I won't say it's like the Grand Canyon because it's way different, but it is, I think it's the deepest ravine. I don't know what the right word is, but the deepest thing in the country in terms of steep, how steep it is and the slope and how fast it drops down to the bottom. And you can see the river in there cutting away. And that's just been millions and millions and millions of years of ice and glaciers and rivers cutting away at these rocks. And it's really cool that you can literally just see time and see all the different years and millions of years going down to the bottom. And it's a pretty cool national park. Not a ton of camping in terms of, being out in the woods or things like that. They have designated areas, but a cool place to check out and really cool sunrises and sunsets. There's all your nice flowers with the reds and purples and blues and arid in the Colorado dry air, but still a lot of plant life thrives. But really nice views, long distance. The sunrise and the sunsets were really cool because the shadows across the rocks were awesome. And I would just do my thing in the BLM land or National Forest land. This is just another campsite off the side of the road. And if you're looking to travel, the national parks are the kind of places that cost more, but it's clearly they're a lot better funded in terms of infrastructure and also information. They have great information centers, and you can show up to a national park with no plan, and they'll fill you in with everything you need, maps and best places to hike and best places to camp and all that. If you're going to a national forest, they have information centers, but you can tell they're way underfunded. They don't care. I've gone to national forest information centers, and they almost don't want you to go to certain places. They're trying to steer you away. Maybe it means more work for them picking up trash, which I could understand, but it's way less helpful. It's night and day experiences. So if you're going to national parks, or if national forests or BLM land, you need to do research on your own on the internet before getting out there. Otherwise, you are probably going to get lost and you're going to miss out on a lot of the best areas. But that's what I was talking about with the shadows for, looks like sunset starting there in the cavern. This dude, I was just sitting there at my campsite. This little chipmunk, it's pretty poor quality, but his mouth is completely stuffed, his cheeks are completely stuffed, and his belly is completely stuffed. He was literally dragging his belly, walking across the road in an army crawl like he was full of food, which he was. But he just stopped, and he stayed in this exact position, and he just stared at me for literally enough time for me to sit there and be like, what are you doing? And pull out my phone and take a picture for him. It must have been there for 5 minutes, still like that, with his legs sticking out, just completely stopped. He was probably saying like, man, I hope he doesn't come and get me because I can't move if he wants to get me. Anyways, there's some more of the canyon, and you can go down into the canyon, but it's a multiple day excursion, and it's certainly a lot of planning, and I did not do that. There's some more of the shadows and different angles that the rocks are being hit. Then I went to Silverton, Colorado, which is a little old mining town, very small, but they go all out for their fireworks, and it's probably the second best firework display I've ever seen. I went to Boston in 2000, and they went all out, so that's probably the best, but it's just regular old Silverton, Colorado. They've got mining tracks, or I should say railroad, nice scenic railroad through the mountains, through Silverton, but some mining history in the town, and mostly a vacation, not a vacation spot, but a place that people pass through, not a whole bunch of locals, but a really cool fireworks show, and nice to be able to just skip into town and see that. So from here, I'm going to hop on over to Ouray, and then I think I head down south towards Durango and Mesa Verde National Park, and that'll be chapter 9, I think. I've lost count of chapters, but we'll keep on going. See you soon.